My name's Divya Mathur. I'm the Chief Merchandising Officer and Fashion Director at Revolve, and you're watching Taking Stock.
Time to rock and roll on this Wednesday, June 3rd, 2 minutes to go here into the closing bell. Unfortunately, my friends, all good things must come to an end after 9 days of record-setting gains across the S&P 500 at long last. It's been a while, but a fair bit of red across the major market indexes. The S&P 500 expected to finish in negative territory, now almost 7/10, not quite at session lows, but let's bring in the Einstein of Wall Street himself, Peter Tuchman.
Hey,
what
guys.
did you see across the tape today? The Dow, interestingly, weakness in Goldman, weakness in Microsoft, driving the Dow down more than 1%, but what'd you see for the tape?
It just kind of feels like that we've had these levels of over-exaggerated earnings action, right? I mean, these stocks are going up $30, $40, $50. We saw it with Marvel. We saw it in a bunch of other names. So people are like buying with this irrational enthusiasm. And at one point, people are just looking at their portfolios and going, you know what, this last month, I mean, where can we go? Yes, can we go higher? We probably will. But maybe I should just scalp a little and take a little profit off the table. So I kind of feel like we may be in the beginning of a couple of days of profit taking. That's what it felt like. I mean, there was stock to buy on the close, but we just couldn't get a lift out of the market, you know? And so we haven't seen this for a little while, but my gut is it's some profit taking. Short term.
Yeah, I mean, especially coming off not just 9 days in a row of gains, but 9 days in a row, essentially all-time highs.
All-time highs every single day across all indices. You know, it is June. I mean, people have got to get a sense there's going to be a lot of reconstitution, rebalances. A little profit taking now is not a problem. No one should be concerned, it's normal.
Time now for the closing bell. I love that. No one should be concerned, it's normal. That's what the man himself just said. Your final tale of the tape on this Wednesday, June 3rd, the S&P 500 almost back down to session lows, currently down 0.7%. The Dow 30, again, given that weakness in names like Goldman Sachs and Microsoft, two of the most weighted name of the Dow 30 components. The Dow down 1.2, the New York Stock Exchange Composite Index finishing at session lows, down about 0.9, and the small caps, as to be expected on a day like today, the hardest hit, down 1.3. Energy, healthcare, consumer staples, the outperformers in the S&P 500, your sector laggards, telecom, financials, and consumer discretionary. Staples go up, discretionary comes down, oil and energy stocks move up. That usually right there is the recipe for the broader equities. Only Meta shares in positive territory out of the Mag 7, META up 4%, Nvidia, Amazon, Microsoft all down about 3%. As for the aforementioned Dow, Walmart, Amgen, and industrial giant Caterpillar, once again, huge tapes there. IBM, Salesforce, and telecom giant Verizon are your Dow 30 laggards. Let's go ahead and bring in Paul Stanley. He is the Chief Investment Officer at Granite Bay Wealth Management, here to kick off the broadcast after the closing bell. Nice to see you here today.
Thanks for having me, JD.
So this is the first day, and it's not you, this is like a bad luck day, but it's the first day in a while we're looking up that we are not finishing at an all-time high, but for the most part, we're still essentially at those very lofty, elevated levels. What have you seen across the tape here on Wall Street the last few weeks? What do you think all of this sets up for the rest of 2026?
Well, I really think what's going on today is really just about investors reassessing risk. Nothing's fundamentally changed about the story out there in the market right now. The AI trade is still strong. Everything still looks great fundamentally. But eventually, people are going to take some money off the table when you've had one of the longest runs in the market that we've had in quite some time. So when you see a jobs report like we had this morning and people start to get worried about inflation and the rates going back up a little bit, it's normal. People want to reassess risk a little bit.
Paul, do you think that big tech can continue to do a lot of the heavy lifting, continue to carry on this market, or are there other sectors that you think investors may increasingly look towards?
Well, I do think big tech is always going to be a driver of the market. If tech doesn't perform, the markets are going to have a hard time just because of how heavily weighted they are in all of the indexes. But ultimately, all of this tech investment has to trickle down to some other parts of the economy for it to make sense. So we're looking for a broadening out of the market, maybe some more mid caps and small caps, industrials, things to start benefiting from all this investment in AI. Because if you just invest in AI endlessly and it's just this inner loop of everybody spending on their own AI, it has to do something for other industries eventually, or what's the point?
How do you think more broadly investors should be thinking about the question of asset allocation in their own portfolios for the rest of the year?
Well, the biggest thing we always focus on is letting people to know don't make a long-term decision based on a short-term issue. So asset allocation for the rest of the year, if you have a proper financial plan and you're focused on the rest of your life, I don't think you fundamentally change that based on anything that's going on right now. If you've got short-term money, then it probably isn't money that should have been invested in the market to begin with. So we try not to tweak asset allocation too much just based on what's going on right in the moment.
I want your take on what you're seeing with inflation. Obviously, this is a way different picture than we were dealing with in the summer of 2022. Safe to say we're well off those highs, thankfully. But you could also argue maybe we're starting to now trend the wrong direction if you look at a reading like core PCE. What do you see for inflation? What do you think the Fed does with what you see in inflation?
It's starting to look more and more likely that there'll be at least one interest rate cut between now and the end of the year.
One interest rate?
rate hike.
Okay,
sorry,
no.
Cut.
I'm
so used to saying cut over the course
me.
of the last couple of years that you just say it intuitively,
Of course.
Right? One interest rate hike between now and the end of the year is starting to look more likely. But I truly believe that a lot of the inflationary fears right now are just based on the hikes in oil and what's going on in Iran, and that's going to pass, right? We don't know exactly when it's going to pass or how it's going to pass, but no geopolitical event lasts forever, so there's no reason to believe that this is going to be the first one that does. And when that all settles down, oil prices should come back into check, and I think that things will settle out a little bit.
Obviously, we had that ADP jobs print today. We get the regular jobs print for the month coming up on Friday from the Bureau of Labor Statistics. That or anything else, any other big catalysts you're paying attention to, you think traders out there might benefit from also focusing on coming up?
I mean, jobs reports are obviously very, very important, right? It's one of those ironic things that a strong jobs report can make people afraid that the economy is running a little bit too hot and then start to be bad for stocks because interest rates might have to go back up. So it's a weird thing when you see jobs reports are great and that's a bad thing.
Yeah, I know a lot of people, we're back in that kind of like good news is maybe bad news maybe not so good news. You and I are looking December probability for the FOMC, a slight chance that we hold. So at least maybe we don't get those cuts, but maybe not a raise either.
It would be great if we were to hold for sure. I know that with a new Fed chair coming in, our president has made it very clear that he's not a fan of them raising interest rates ever. So hopefully that political pressure doesn't play into it, but it wouldn't be surprising if it does.
2 weeks from today, we get the next FOMC decision. Paul Stanley, thanks for being here. Come back soon. It's nice to see you.
All right, thanks for having me.
Robbie will take your mic. Jeff, you and I will head this way. Here are some of the top analyst calls that moved the tape this morning. Hello, good morning. All right, first up, Goldman Sachs reiterating Apple as a buy, saying it's bullish ahead of the company's Worldwide Developers Conference next week, which could include AI upgrades to Siri. Shares of Apple up 14% on the year. Next up, Morgan Stanley downgrading Shake Shack to equal weight on the day, citing a lack of, go Knicks, you're not kidding, citing a lack of visibility on in-store traffic in a tough consumer environment. Shares down on the day, also down 33% on the year. Finally, UBS downgrading Victoria's Secret to neutral after earnings. The stock was down about 4% on the day, which sounds like a lot until you remember shares were up 47% yesterday. So, context changes everything. All right, let's take a look here at one stock that calls the New York Stock Exchange at home. It is ticker symbol M, as in Macy's, as in, hey, it's actually up 0.6 on the day, despite weakening consumer sentiment. Not a bad quarter for the retail giant. CEO Tony Springs said this morning he expected to see more pressure, but the reality, he says, is the resilience of the consumer defies what they say in the commentary about consumer confidence and therefore about consumer spending. Shares about flat so far on the year, up 0.6 on the day. All this week here on Taking Stock, we are bringing you full coverage of Money 2020 Europe from the great city of Amsterdam. Earlier today, FinTech TV's very own Anastasia Kinski sat down with Danielle Tanella of ING. Take a look.
Welcome, I'm Anastasia Kinski and I'm here at Money 2020 Europe, Amsterdam. I'm very, very pleased to be joined by Danielle Tanella, who is CTO and Management Board Member at ING. Danielle, thank you for joining me.
Pleasure.
So, you are both the CTO and board management. Can you tell me what that means when it comes to focusing on technology transformation in the company?
Yeah. Look, essentially it means that we can take decisions in technology terms that are way closer to business than in the classical model where technology just has to do whatever visions come out. And that creates also a lot of maturity in the use of technology. So at ING, the level of technology proficiency in the board is very high, and that allows me to run a technology transformation which is more fundamental and more substantial than just buying tools.
It's something we've heard so much about here at the conference, which is this education point. And it may sound patronizing, but we still are sometimes on the back foot of that. What have you seen, as your board has shifted around, keeping technology at the center of decision making? What have you seen as a culture transformation in the organization, and how is that influencing decisions?
I mean, that education goes also the other way around. I mean, technology also gets a lot of education on what is important in the macro context for the bank. And that education, that culture transformation, essentially makes very clear the dilemma that we face, where you have parts of the organization who want to go fast and go hard, and parts of the organization like tech that say, well, yes, we can go fast, but we need to ensure that we maintain control, digital sustainability, that we can maintain risk, scalability, that we maintain reliability, all the parameters that are a bit antithetic to speed, right? And that conversation is what makes culture.
Well, it's like a smooth gear shift. You've got to have the clutch in the right place.
Absolutely.
You can't just constantly be going back and forth. So in practice at ING, I've heard you speak about, as you say, this push and pull as a sort of feng shui of technology. Can you tell us about that a little bit?
Yeah. Digital transformation has been misread, I think, so long with, I have a problem, I buy a technology, I solve my problem, and it never works. Right? It's more a question of managing complexity, simplification, adopting technologies, using them. And in that universe, the Feng Shui example is the one that says, well, you cannot just buy something on the edge of what you already have. You have to look what you have inside your shop already, and you have to maintain that complexity.
Yeah.
And simplification is effort, does not happen by itself. It requires investment, requires vision, it requires commercial convergence, it requires a business strategy that aligns and that enables a technology consolidation. And that's what I call the Feng Shui of technology, is clean up what you have in the zoo to create also optionality to then effectively get new technologies in-house.
It's such an important part of it. It's the harmonization of all these stakeholders and all these parts. We'll talk a little bit about what ING is doing differently to deliver this sort of simple, personalized customer experience. Because as you said, you can't just push technology into wherever you want. It needs to be, at the end of the day, what the end user wants.
Absolutely. Well, there are a couple of things. We are, besides putting AI in focus, besides scalability, simplification, there is a deep transformation that ING started 8 to 10 years ago, which was given on the one side through Agile. We went full Agile at scale, and we transformed the way we develop software and the way we build our core banking systems. That creates a flexibility that is now facilitating the transformation and the build up on AI. And the last bit is we are extremely active in listening to what the clients are telling us, both to us directly or to the market, ratings or places where they express what they think about us, and we flow that back to the system to work essentially in reducing friction, because that's what scares clients.
Yeah. Well, thank you. We look forward to seeing further cultural transformation, harmonization, and Feng Shui. Thank you for joining me, Daniele.
Thank you so much.
Welcome back to the show. Puneet Mehta joins us now. He is the CEO of Natomi, an AI customer service platform down here on the trading floor of the New York Stock Exchange. Nice to see you today.
Great to see you too.
Talk to me a bit more about what Natomi is, and really what do you see as being the main problems that the company is uniquely addressing?
Yeah, we are building the most consequential enterprise AI company on the planet right now, and the goal is to create the agentic autonomous front office. So if you look at enterprise AI, AI really needs an enterprise win today. We have token factories like OpenAI, like Anthropic. Now obviously they have a token economy, but what's marrying them to an outcome economy? Businesses need outcomes. Businesses don't just need tokens. We deliver outcomes, and we are starting with that autonomous front office.
Puneet, where are the biggest opportunities and where are the biggest challenges to operate in the space that you specialize in right now?
So the biggest opportunities, I would say, is once we make the front office autonomous, obviously re-engineering the businesses across the board, right? It's rewiring their processes, making them more agentic, including intelligence in regular work that people do. And we think that AI is a new building block for modern business. Where is the biggest pitfalls? If it stays the token economy, nobody wants that. We all want value, we all want to create businesses differently, we all want better customer experiences, we don't just want tokens.
You just raised $110 million. What does that capital allow you to do that you could not previously do?
So we are bringing it to more and more of these largest enterprises on the planet. So companies like Delta, United, MetLife, Rockwell Automation, DraftKings, they already work with us. Now we are taking what we have done for them and bringing it to the rest of the Fortune 500. At many of the companies that we work with, we are on the path to delivering 100 million in savings using agentic AI. So we want to do that for every large company on the planet.
Artificial intelligence can still have from time to time its fair share of mistakes, its fair share of hallucinations. How do you build trust when customer interactions are on the line?
So that's something we are actually known for. We invented a template called Sanctioned AI. It's a blueprint that we plan to make open source so that every company on the planet can adopt it. Companies that do this themselves or they do it with Natomi, but it's really, really important for AI to work in a predictable way. If you think about these large language models, they're engineered to be unpredictable. So we are squeezing predictability out of a building block that's fundamentally designed to be unpredictable. That's not an easy technology problem to solve, but we have solved it at Natomi. That's why we help the largest companies on the planet represent themselves to their customers.
Puneet Mehta, CEO of Natomi, congratulations on all of the success. Really grateful for you being on the show today. Nice to see you.
Great to see you too. Appreciate it.
Coming up after a quick break, the CEO of Stroot and a preview of tomorrow's earnings. You cannot miss a whole lot more taking stock coming up live from the big board after this. Welcome back to the show. Our next guest is the CEO and co-founder of Stroot, Tariq Al-Rouri. It is great to see you here today. Thanks for taking some time.
Thank you so much for having me.
You guys are an AI-powered accounts receivable platform for people hearing about the firm for the first time. What are your core priorities and the most important things you want people to know?
Yeah, so we're an AI agent. We help companies ranging from Honeywell to DirecTV reducing overdue invoices, helping them match cash, helping them handle issues. Been around for 2 years. We have over 150 customers and growing really fast.
I feel like accounts receivable is something that seems perfect for AI disruption and use. Why hasn't anyone really successfully automated this until now?
It's a great question. The technology didn't exist until about 2 years ago. No one really sat in the flow of funds. No one really automated things, whether making AI phone calls, emailing, handling disputes. We're able to take all this data and drive outcomes for our customers ranging from Honeywell to flyover state businesses like Bishop Lifting.
A lot of companies are adding AI chatbots to existing software. Anyone watched, I'm sure at some point has had a little bit of a back and forth. What makes the work at Stroot different?
So we integrate from your ERP systems, your bank accounts, your CRMs. So we sit on top of everything and we don't just chatbot stuff. We help understand the context, the knowledge, and really deliver a more meaningful result. And our customers see about a 40% reduction in DSO in the first 6 months and about an 80% reduction in headcount.
Let's talk a little bit more. What are those other results that customers are seeing, and how important is the consumer or customer feedback that you get in real time, just still adapting as you evolve?
Such an interesting question, because a lot of times back office finance, you're like, hey, I want to wash my hands, give this to somebody. With Stute, we're able to deliver a better customer experience or CSAT score. So our customers see about a 90% increase in the first month of using the platform. So like take DirecTV, for instance. You have a lot of subscribers, you have a lot of ad revenue. You know, in 8 days of going live, we were able to reduce their DSO or overdue invoices or subscriptions right out of the box.
Do you mind if I ask where the name comes from, Stute?
Yeah, so Stute is it's a rugby word, and I played rugby after college. I wrestled in college, wanted to drink some beers, have a good time. And so Stute, it means prop in South African.
Wow.
Yeah, fun time.
I'm a journalist. I ask the hard-hitting questions like, what does the name mean? But that's a really fascinating. That was way cooler than I thought.
Yeah,
it was
and everybody
be.
sees it, they know it.
Yeah, you're not, and now I won't forget it. When people hear the phrase AI does the work, they immediately think about jobs. What does that kind of AI integration actually look like to you at your work?
It's one of the biggest fugazis of right now. AI's taking everybody's job. AI is taking everybody's job. It's increasing people's productivity, and it's allowing people to do things they didn't want to do. You know, you graduate with an MBA from a school like Fordham, and you get into finance. Your first job, hey, I might be in accounts receivable. Do you really want to send out a spreadsheet? It's not really what they want to do. You know, you're good at Excel. You're good at viewing your customers as a portfolio. How do we drive better capital allocation decisions? That's what we free up our customers to do. Our tagline is, we punch in at 5 so you can go watch your kid's soccer game.
I love that. Before I let you go, Nixon, how many games?
Nixon 4.
Nixon 4.
Nixon
Heard it here
4.
first.
You heard it from me.
Tarek Al-Rouri, CEO and co-founder of Stute. Congrats, man.
Thank
Come
you,
back
sir.
anytime.
Appreciate it.
All right, a lot more taking stock coming up right after this.
Welcome. Here we are at Money 2020 Europe in Amsterdam, and I'm very pleased to be joined by Michael Shaulov, who is CEO and co-founder of Fireblocks. Michael, thank you very much for joining us.
Thanks for having me here.
So, you know, it's been a very busy morning. We're halfway through day one. What are the top things you've heard here at Money 2020? What are you most excited about?
Well, I think like every Money 2020, it's fascinating for us because we come here and we see the evolution from year to year.
Well,
I think it's like the 4th year that we're doing it, or 5th year that we're doing it as a company. And it's pretty wild to see how the industry came along in terms of adopting digital assets and specifically stable coins.
Yes.
You know, every year it's just a completely different climate in terms of the type of companies we meet, type of clients we have, the type of discussions you're able to have. on this topic, and clearly like this year it's been like the peak since we started.
Absolutely. I mean, you think it can't get bigger, and then here it is, even dominating the topic even more, perhaps only really in competition with AI and agentic AI. On the stablecoins, payments points, and to do with institutional adoption, what do you think, apart from the Money 2020 programming, what do you think are the signals for where the adoption is going, how quickly it's going, what progress is being made?
Yeah, so we are now, it's actually quite interesting. So Fireblocks right now is processing $6 trillion per year of digital asset volume. About a year ago, 40-something% of that was stablecoin. Now it's 65%, right?
Interesting.
So out of that is basically we are at a 3.5, almost $4 trillion per year. It only goes for Fireblocks, and we are about like 10% of all the on-chain transactions. Now, it's also interesting to see that there is a very strong shift from stablecoins being used for trading cryptos. That's actually like how, not many people are aware, but the way that stablecoin and specifically Tether started is by helping facilitating trading or the settlement leg of it. Now, about 30% of it is already payment companies using stablecoins to move assets cross-chain.
Right.
And last 12 months, it was the first time that USDC surpassed from percentage-wise, the volume of Tether on our platform.
Yeah. I mean, this is really interesting news, and to see that like kind of moving alongside the regulatory landscape, where I know we've got like different jurisdictions that we're going to need to cover. Let's start with what's going on in the US, because USDC is obviously what we're paying attention to there. The regulatory landscape in the US and what everyone's waiting for in the Clarity Act to figure out this yields conversation. What's your take on the direction there?
Yes, I think that honestly for stablecoins in the US, the most important things were already made, the Genius Act.
Right.
And the Genius Act was basically unleashed this crazy adoption that we are seeing among the fintechs, among the payment companies, among the banks, and now propagates actually like, to corporate world and to users.
Yeah.
In the last 6 months or so, we onboarded all the big remitters, Western Union, MoneyGram, Ria Finance, TapTap, and all those guys are now using stablecoins. Clarity Act is still clearly the open question, and it mostly applies to, I would say, how aggressively the banks will lean in, or how much friction they will actually put behind this topic. My personal opinion actually doesn't matter, and I think that the banks misunderstand the whole notion of stablecoins. The main reason for that is that it actually doesn't matter if they do tokenized deposits or stablecoin in a system that you can subscribe in real time into money market funds, and with everything that is actually happening from a tokenization standpoint on the capital market front, like the DTCC project with Canton and so on. If you're a user and it actually comes together with AI and you have some kind of programmable element, you would never leave assets idle, right? So this algorithm, or you as a user, you don't need to wait 2 days to deposit your money into some kind of saving account.
Yeah.
All this friction is gone. So users will accrue interest directly from whatever money they have with the financial institution, whether it will happen for stable coins or whether it will happen by depositing and redeeming them to a money market fund. So I think that the business model of the banks will be under a lot of pressure and will have to evolve regardless of this entire discussion around the Clarity Act, which is just like a funny debate between two CEOs that I think creating board used as necessary because one of them doesn't understand exactly that his business model is going to change.
Well, thank you so much for joining us. I really hope the rest of the conference is good. I happen to know that there's an announcement or two coming out in the next couple of days around stablecoins, so we look forward to more.
Yeah, likewise. Thanks so much for having me.
Welcome back. Tomorrow morning here on Wall Street, we will get weekly jobless claims crossing the wire for investors to digest at 8:30 a.m. tomorrow morning. The latest quarterly results from Brown-Forman, that's the owner of Jack Daniels. After the bell, the latest numbers from Planet Labs, Lululemon, and DocuSign. But before all that, Knicks Spurs, game 1 of the NBA Finals. Go New York, go New York, go. Thank you for watching today's edition of Taking Stock. Go Knicks. We'll see you tomorrow. That was good. That was a good one.